Hi everyone, this is Marv Eisen from Timeless Dollar. And in this video, I want to do a replay of the chart from the morning of February 5th, Friday, February 5th, to find the best place to make a trade that would give us the highest probability of a profit. I have my cursor set to the candle just prior to the market open. And just prior to the market open, we can notice that the high of the price high is just about where the high was overnight. Also, that coincides with a nearly overbought stochastic. So if you were inclined to place a trade at the open to the downside, you might be rewarded. It would have been a guess, but you might be rewarded. Let's see if you would have been. I'm going to do a slow motion of this trade, of this morning session from the open at 9:30 until about 11 a.m. Let's go. Okay, I'm going to stop the chart here at about 11 a.m. Let me get back to where we were at the open at 9:30. Here we are, 9:30, February 5th. And would you have been right if you took a trade, strictly a guess, that the price action being, the price level being at the high of the overnight, coinciding with the stochastic being overbought, would you have been right in placing a trade to the short side? Yes, you would have. You would have been right. And I want to point out on this chart, there are 2 points between each horizontal line, and these are 3-minute candles. If you had taken the trade just at the market open, you would have seen that prices declined about 6 points, then recovered, and at 9:39, the bulls started to step in, and it might have made you a little nervous that you made your money, get out of the trade. You would have been lucky to hop on the trade. You would have made yourself 5 or 6 points. Would have been fine. Stochastics are not giving us a signal in this area, and prices continued their decline from about 9:50 through the rest of the morning up until 10:18. Now at 10:18, look what happens. At 10:18, we have a hammer forming, and another hammer following it at 10:21, and look where the stochastics are. Stochastics are at the oversold level. And here at 10:21, we can see the bulls starting to step in. And this would have been a place of a high probability entry for a trade to the upside. And if you did that, you would have been rewarded to the extent of 2, 4, 6, 8, 10 points in a high probability trade. And that's where the highest probability existed to place a trade, just strictly going by the candlestick formations and the stochastics. So this is Marv Eisen from Timeless Dollar. Thanks for watching. Hope you learned something. My method of trading is to trade like a business, and to trade like a business means that a business needs to be a sure thing. And trading, of course, can never be a sure thing, but as sure as possible. So if you jumped in early in the morning, it would have been a good guess, and you could have jumped off if prices continued their upward swing. You could have jumped off with a small loss. It would have been fine. So at any rate, the best opportunity to trade would have been at this signal in the morning, coinciding with the stochastics being oversold, and we would have picked up around 12 points. It would have been a good high probability trade, and you would have done very well for the morning of Friday, February 5th.